Welcome to the show, Mr. Dan Geltrude, America's accountant. Thanks for coming on the show, Dan. Happy Monday to you. I don't know, is it something like 40% of the world's goods, change hands between these two? So it's a pretty big deal.
Oh, it's a very big deal, Scott. This is great news all the way around here because this deal sets the potential new template for resolving these trade disputes. Because if you look at what deals have been done at this point that are noteworthy, you have Japan, you have the Philippines, you have Vietnam, you have Indonesia, right? So we're making progress, but Europe is a big one. Now, we still have China, India, Canada, Mexico to go. So there's still a lot to be done. But what this deal does show is that a major deal could be cut where both sides can live with it, and hopefully the markets will be able to accept it as well.
Are we slowly but surely kind of boxing out China here a little bit?
Well, I think that's got to be part of the strategy, right, Scott? Because they're really the big dog on the block besides us. So we have to deal with them. So remember, if you go back a few months, China was really exerting a lot of pressure on countries not to do a deal with the U.S. So they were trying to box us out. But it seems like Donald Trump has out-strategized, outsmarted, whatever you want to call it, and seems to be getting on a roll right now.
If you would take a look at all the headlines that we're seeing right now over the last, say, 2 to 3 weeks, and I'm sure today and going forward, they're drastically different than they were at the end of March and beginning of April of this year. And slowly but surely, have we started to win the media around to the fact that maybe some of these trade deals are actually going to work and benefit the United States, or are they still skeptical in your mind?
Well, what everybody's waiting to see here, Scott, is what happens with inflation, because a lot of people believe that these tariffs that we're putting in place are going to be inflationary. And theoretically, that would be true. Because you say, well, if you're going to tax these products, then they're going to be more expensive to the consumer. However, what you have to keep in mind is these companies in other countries, they don't want to lose market share. So
Right.
What happens is they're going to have to lower their prices, right, to make up for that difference in the tariffs. That's why I believe at this point we're not seeing inflation running through just yet.
And if this is the template, like you said, and I agree with you, I think it is, and 15% is the number, I think Wall Street was looking at, say, a 10 to 15% number, and I think that the market can handle that. I think the market will be happy with that. And that doesn't mean necessarily that everything that you have imported from China in Target and Walmart is going to be suddenly 15% higher. You're right. There's a lot of people along the way. They're going to take their chunk of pain with that. And slowly but surely, when it finally does get to the end consumer, you might see that it's up a few bucks on $50 rather than a full 15%, correct?
Right, and that's what I think we're going to see with the markets here. I think the markets may very well stabilize around a predictable 15% tariff floor, because as we know, the market doesn't like uncertainty. So if this becomes the model, Scott, and I think we're kind of agreeing that may be the case, the market is going to like this because it's stability. It also provides greater clarity to these businesses that are relying on tariff-sensitive supply chains. So all the way around, just knowing what it's going to be is very helpful for everybody, because now you know the rules of the game and you play accordingly.
And so this dog days of summer, which I feel like we're in a little bit, I don't know if you would agree, but the market's not reacting to great news like it would normally do, and or maybe bad news either. But what's going to be the next thing that's going to shock us out of this malaise that we've been kind of? We're setting all-time record highs like we did every day last week in the S&P, basically, but it's only because we're settling a couple points higher each day. It's not anything that's spiking higher. What's going to take to get us going to the upside again when folks can say that, okay, we've shaken this off, we've maintained the gains, now we're making a new leg higher?
Well, you know what I see here, Scott, and I see it in everyday business, in my company as well as our clients. Everything is so reliant upon AI, artificial intelligence, and technology, That is the new frontier. And I believe the more the market becomes reliant upon technology companies, because we're absolutely seeing that the highs in the markets are being driven quite a bit by technology. And I believe that is what's going to continue to surge the market forward, because everybody who's not in the technology business is going to be adapting to new technology. And I think that's really what makes the market go even higher, better bottom lines.
We had an interesting guest on last week, which I thought was a really good psychological point, and maybe you would agree to this, but we've got some folks, Kenny's one of them, Kenny Pocari, Kenny's a buddy of ours. Mm-hmm. He thinks that the market could see a 2 to 5% pullback here, going into the fall, because this is, we're starting to get into a pretty volatile time for the markets, historically speaking. But there's a few out there that are there's bulls that are rooting for a 2 to 5% pullback because they think that'll embolden the shorts to stay short, which ultimately will be more fuel to the upside after we get through that little bump. Is that an interesting thought to you?
Well, it is, Scott, but you know something, from my standpoint and the business that we're in here, how do we root against the market? The market is going to do what it does. It's going to go up. It's going to go down. There's going to be adjustments overall. But historically, what happens? The market continues to rise. And that's my basis to say I think the market still has plenty of room, because I think the market is now being technology driven. And I think there's so much more to go in that area. So that's my view. Listen, are there going to be some tough days ahead? And the fall traditionally has been a slippery slope for many stocks. Sure. But overall, I'm bullish on what's happening.
Yeah, it just flashed right before we came on. I saw it as a news headline. I can't remember the name of the bank, but it was another prognosticator, forecaster, whatever. They were falling all over themselves in April to lower their estimate for the end of the year in the S&P 500. We're around 6,400 right now, give or take, okay? This latest one I saw, 7,100 now. All right, so they're falling all over themselves to redo it to the upside. It'll be interesting to see. But the one thing is for sure is the managed money, the professional money. They're the ones that got it wrong this time around, and it's been really the retail sector that's kind of really taken this for a ride and done very, very well out of it this year, which is good. They needed a win. I think that's nice to see the little guy every now and can score some points. Dan, thank you very much for coming on. Always love to get Monday started with you. Dan Geltrude coming to us from Nutley, New Jersey. Thanks for being on the show. Let's take a look at those markets.